The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Stock of the day is, Nvidia is the biggest. Is it time to get into it with a market cap of some $3 trillion? Remains the leader in the sector. Competition though, certainly, it was all upended from DeepSeek from a couple of weeks ago, with supposed low-cost models in the AI and bringing up those questions as to how much CapEx is being spent in the States, just as far as particularly spend on fitting out what you can see right now, those data centers. Now, looking into its quarterly revenue, Nvidia has reported a 94% jump to $35.1 billion, supported by continued demand for data centers and chips to train large language models. So, is it time to look under the radar at some other players or stick with the market leader, Lachlan?
Look, I think we don't own Nvidia, but we think it's a fantastic business. It's obviously in a very strong position due to its size and scale. And we just don't think it's a smart thing to bet against Jensen Huang. He's shown himself to be a great leader. And look, we know the demand that is there. We own Amazon and Microsoft, so we can see the spending that they're kind of engaging in at the moment. So we think that the demand outlook looks very good. But in terms of the model efficiency, Andrew, like you mentioned with DeepSeek, I think the efficiency of the models will continue to improve over time. And I guess that does represent a slight headwind to GPU production and sales for Nvidia. But I'd say if you look at the start of the cloud, compute and storage, even back then, that came down very quickly. But what that did, the lower prices brought more people into the cloud business, and it kept on going. So we expect the same to happen with Nvidia and the other ones which have the similar sort of demand. We think it's a very good opportunity. It's not incredibly cheap, but it has very good growth prospects, and I think AI is here to stay, and we'll see that play out over the next 5 years.
So are you buying it at this level?
I'm not buying it at this level. I prefer others in the space, but I think it's a fantastic business.
I'll call that a hold from you. Now, Mark, also, of course, it relies on TSMC for its in terms of its the semiconductor manufacturer. We're going to get to that in a moment. However, coming back to Trump, he has threatened tariffs on semiconductors out of Taiwan. So is that a threat to Nvidia?
It's not going to happen. It's ridiculous. Right. All the American semiconductors, but the bulk of them, particularly the high-end ones, all come out of Taiwan. So if you put tariffs on it, all you'd be doing is hurting the industry in the US. That makes no sense. He's not a fool. So I don't buy that at all. I really don't. I mean, he is trying to. I think he's going to try and get more money out of Taiwan to help, give them any sort of security guarantees. That's par for the course. But no, I don't believe it. I think that'd be highly unlikely. And at the moment, you've got Taiwan Semiconductor is building foundries in the US. They've got one open in Arizona and so on. But they still, the idea is it will take our dependence off Taiwan, but the reality is it hasn't, because they're only going to be doing lower level chips. I think they're doing 5 nanometer, none of the new 3s or anything will be done in the US, but they still have to ship all those silicon wafers after they're processed back to Taiwan for finishing and so on. So even though they've spent billions of dollars and they're building more, Taiwan is still central, and it basically, if anything happens to Taiwan, then we are really screwed. I think, in so many ways.
So, back to Nvidia then.
Yeah. So, Nvidia, it's a brilliant company. I'm a shareholder, so I'll declare that. I did buy some more on the drop for DeepSeek.
Yep.
My view of DeepSeek is there's a thing called the Jevons paradox. Have you heard of that? Jevons paradox?
No.
It was coined back in the early 1800s with coal, or maybe late 1700s, but the new technology came in on how to burn coal much more efficiently to make better steam, which was going to dramatically reduce the cost of steam engines. So the theory at the time was, that means that everyone's going to make all this extra money and things will get a bit cheaper. What actually happened, it triggered a massive boom in steam engines for everything, because it brought the price down, that suddenly all these other things became. It is the same with semiconductors. And I was reading an article from Microsoft the other day, and they said it is exactly that. They see all of these improvements as accelerating the whole program.
So cheaper, more accessible.
Therefore, more use. And there's massive use to still come. So the argument is that this is a very, very positive thing for Nvidia, because it's going to increase the demand. Not one of the majors have said they're going to reduce expenditure. Not one. All of them say no. We're all in, and most of them, which is Microsoft and Amazon and Facebook, are spending $100 billion on their data center work over the next year each. So going back to Nvidia, it was a ridiculous reaction in my view. So I bought some. Having said that, and I've done very well on Nvidia. The problem with it is it's got about 100% EPS growth. So it's been, for the last 2 years, it's doubling each time. We've never seen a company at this scale generate the kind of cash flow it's generating. So they're at the moment, I think they came out with 32 billion for the quarter, I think. Is that for the quarter?
Yep.
Yeah, so their run rate's like 120 billion a year profit. And we think that'll be next year, well, 25 will be more like 180 billion because there's quite a lot more money being spent apart from just adding up Amazon and so on. So it's going to shoot the lights out again. But the problem is it's on a 50 trailing PE at the moment. Now 50 PE, as I'm sure most viewers would realise, is very low for a company that's doubling its earnings every year. But the reality is they can't keep doing it. And I'm not so concerned about the competitive threat in that we think they're at least 5 years ahead of the market. AMD's often put up as being the contender, but they have all sorts of problems. They have some good stuff as well, and they've got a new chip coming out, but they don't have the network. They don't have anything like the infrastructure that Jensen Huang's built at Nvidia. He's really built the whole system to be able to scale really fast. So he's got massive moat, massive competitive advantages. But having said that, there is no way the volume can keep running at this level. Yeah, so let's say in 2 years' time, I think probably the next 2 years it may.
Yep.
After that, Nvidia sales will naturally come down. They'll also have competitive pressure because there's a lot of ASIC chips which are a bit different, but that all the majors are making as well. So there'll be plenty more production coming in as well, and that will start to reduce their margins. I think Nvidia's gross margins over 90%. Its gross profit margin, which is not sustainable in a competitive market. So you've got a lot of people trying to prod AMD and so on, whose products are cheaper, but they're not. They aren't a substitute yet. Now there's new stuff coming out too, new technologies and all sorts of things. So Nvidia's days of this kind of growth are numbered in my view. And then you have a problem with the price and the PE. Because let's say Nvidia makes 180 billion this year, and in 2 years' time that drops to 100 billion. So forget about growth. You now have earnings declining. What will the market think of that? So what's that worth? Well, maybe it still should be at a 20 PE or something. But the bottom line is you've got significant price risk now.
Yep.
And they don't have a reliable way of being able to maintain anything resembling that kind of growth rate in my view.
So Mark, all that said, what are you doing with the stock right now?
I'm holding it.
Yep.
But I'm watching it like a hawk.
Yep.
And I'm watching what's going on and what's happening with the technology.
Okay.
And at some point in time I may sell it. Jensen Huang is a genius. He's built this thing from zero in over 30 years, and he's still quite young, as he says, and not interested in retiring. And he loves the game, and he said I've listened to all his speeches. He's very prolific. If anyone's interested in Nvidia, YouTube Jensen Huang on Nvidia and watch some of his presentations. Anyway, he has said that he's very well aware of what happened to in the .com crash. What was that called? The Cisco. The Cisco problem, because a lot of people go, Cisco was the most expensive stock on the stock exchange in '99, and then totally tanked. Didn't have anything like these revenues and so on that Nvidia had. But point is, he's very aware of that, and he doesn't want Nvidia to become a Cisco, and he said that. So he's building out a whole range of networks, connecting stuff, all the AI products and bots and things, software, massive amounts of stuff, which he's hoping will then give them a long-term growth. And he may pull it off, but I don't think it'll be the same sort of growth rate. And I think the core chips will come down and their margins will reduce over time. I think it's inevitable.
Yep.
So I'm all in.
All right, but beware.
Long story, but it's a complicated.
Long story. We got there in the end. It is a double hold for our stock of the day, Nvidia.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.